Thank you for staying with On Point. Stocks in Asia jumped today, taking their cue from Wall Street's rally that saw the Dow Jones Industrial pass the 30,000 milestone for the first time, as investors were upbeat on vaccine news and signs that a formal transition of power was finally beginning to get underway in the United States. Over in Japan, the Nikkei share average ended the day up 0.5%. Hong Kong also ended up in positive territory, with the Hang Seng Index ending the day up 0.3%. Mainland China, however, was on a downer, the Shanghai Composite Index ending the day in the red to the tune of 1.2%. Over in the United States, U.S. stocks rallied on Tuesday, with the Dow reaching a record high. Investors appeared more buoyant on a number of factors, including possible vaccines on shelves sooner than expected and an expected smooth transition for U.S. President-elect Joe Biden to the White House. The Dow Jones Industrial Average rose 1.54% to close at 30,045 index points. The S&P 500 gained 1.62% to close at 3,635 index points, while the Vestact Composite added 1.31% to close at 12,036 points. European and local markets have seemingly not taken a cue from Asian markets, as they're currently trading in the red. However, it's a better day for the precious metals, which were subdued yesterday, while Brent crude oil continues to surge, now trading above $48 a barrel. Let's take a look at the indicators. Well, for more on the markets, I'm joined by Michael Treherne. He's from Vestact. Thank you so much, Michael, for joining us. What would you say are the main drivers of global markets today and our local market?
Yes, Nampu, I think it's general positive sentiment, as you mentioned earlier. Having 3 confirmed vaccines now is very positive for global markets in general. And it looks like between those 3 vaccines, about 4 million doses can be created in the next year. And that means that the world can mostly get back to normal over the next 18 months. And traders are taking that cue. And the result is that the MSCI Global Markets Index looks set to have its best month on record, and that goes back all the way to 1988. So global markets at the moment definitely on average are doing really, really well, even though there's a few rare days you can't have it all green. But in general, the trend is up.
Yeah. Now, I know that you guys at Vestact look very closely at offshore stocks, particularly your more tech stocks and so on. And we do see that Elon Musk, the South African chap who has established Tesla, his company's done quite nicely. It's now worth $500 billion US. How did that happen? Because at the beginning of the year, it was worth a lot less than that.
A lot less. Nampu, it's up almost 10 times this year. The big game changer for them was they built a gigafactory in China. They started building at the beginning of 2019, so they only broke ground in January 2019. And by October 2019, everything was up and they were starting to roll a few cars out of the factory. So that mind-blowing speed of which they built that factory, and the 60% less costs to build the factory compared to the US factory, was a complete game changer for the company. And it showed the market how quickly Tesla can bring on an extra couple of 100,000 cars in production each year. And that's really propelled the company forward in terms of momentum. And then not to mention, there's just a general shift towards more electric cars. Tesla can't produce enough cars. And that's sort of what's been pushing the share price high over the last 6 months or so. And
incidentally, Elon Musk has now become the second richest billionaire in the world.
Yeah, great for him. He started off, he was one of the founders of PayPal, which is an amazing company, and he sold off. He then put all his money into SpaceX and into Tesla. And he actually had to borrow money so that he could pay rent at the end of the month. So it shows you that the man's risked everything to create game-changing companies. And now he's being duly rewarded for all that risk. The man also works 80 to 100 hours a week. If you see him interviews on TV, you can see the dark rings under his eyes. So I'd definitely say he's paid his dues to get to this point in life.
Here at home, we do see that Moody's has decided to downgrade the big five banks. And of course, this follows them downgrading the sovereign further into junk status from BA1 to BA2. But I suppose this is quite normal. It does happen that they tend to do that once they've downgraded the sovereign. But what are the implications of the banks being downgraded for the banks and particularly for the consumer?
Yes, as you say, it's normal procedure. The ratings agencies say that local banks can't have a higher credit rating than the country that they operate in. And as a result, even though the banks haven't done anything wrong themselves, given the interconnectedness of the financial system, if the government's bond ratings drop, so too do the banks. And part of the reason is most of the banks' secure capital sits in government bonds. So when the government bonds get reduced, then the bank's stability is reduced slightly as well. So the big implication, though, for banks is that it makes it more difficult for them to raise money if they need it, and it makes it more expensive. So no short-term real impact for consumers, but it is a worry if the country keeps getting downgraded further. It could hamper banks in terms of their capital stability, but that's still a long way off.
Yeah. And then let's take a look at retailer Lewis. They came out with their half-year results, so that's for the 6 months ended September. Revenue got hit because of the national lockdown, but they were still able to produce a 13.6% increase in operating profit, with headline earnings per share up 9.9%. That company wasn't doing so well that long ago, but they seem to have turned things around.
Yes, I mean, I think after this pandemic, the first thing you do when a company reports is you have a look at what their dividend payment is. Most companies have suspended their dividends. A few companies continue to pay a dividend. And then there's a few, very, very few that actually increase their dividend. And in Lewis's case, they increased their dividend by 10.3%. That shows you management's confidence in the period going forward. It shows you that they're confident in their overall model, and lockdown actually helped them in the sense that all the sales that they missed out during the 6 weeks of lockdown were made up after the lockdown due to pent-up demand. But for those 6 weeks, they had significantly lower operating costs. And as a result, their profits over the last 6 months were actually higher than last year, just because of that suspension in a lot of their costs.
Yes.
So it has worked well for them. But one of their things is they do note that it is tough to collect money from their debtors.
And then one last thing, Growth Point, they're set to meet with investors by the end of this month. And we know that the property sector, particularly the real estate investment trust sector, has been hit hard this year and even before. But of course, their valuations are quite low. Is this an area that one should try and invest in, given the fact that the economy can't be in the doldrums forever? And if you are an investor, you're supposed to be doing it for the long haul.
So debt makes big established companies brittle and fragile. And the property sector, in order to make their business model work, generally relies on quite high levels of debt. The result was that when COVID hit, you had a lot of tenants not paying anymore. You've got other tenants who are now cancelling leases. And the result is that a lot of these companies struggled with then having too much debt. And that's why you've seen their valuations drop so much. It's because the market's saying you're a very, very risky investment. So Nompu, I don't know what you think of what's going to happen in the future. Do you think that people are going to spend more time in office or less time? Do you think retailers are going to do more online or more in the shopping malls? It's a very uncertain space, and as such, investors are valuing these REITs as a risky investment. So if you are going to put your money into it, you need to understand that it is a risky play.
Only time will tell those questions that you pose. Thank you so much, Michael, for your time and insights. Michael Treherne there. He's a portfolio manager at Vestact. After a short break, we'll have more news for you. Do stay with us.